The banks are still fundamental, but there are increasingly additional parties that are coming into this and providing complementary services.
Trade in itself haven't really changed. There's still a buyer and a seller, and there's a period of time for the goods or services to reach the buyer. So all of that really hasn't changed since the days of the Carthaginians or the Babylonians.
This guide has officially been launched, and what's more, it's free for everyone. I'm Dipesh Patel, editor at Trade Treasury Payments. Today, we're delighted to launch our trade finance guide in partnership with ITFA. Although we're here in London, what's going on across the pond in Miami is much more exciting. At the ITFA Americas annual conference, this guide has officially been launched, and what's more, it's free for everyone. Trade sits at the heart of global commerce. It's a key driver for economic development and poverty reduction. Yet geopolitical tensions, the rise of artificial intelligence, and the advancement of digital trade expose the fragility of global trade and commerce. Trade finance, yet, for many, remains one of the most complex and least understood corners of financial services. There is now a need for clear, accessible, and definitive guidance, and this need has never been greater. The guide provides the latest perspectives on the full trade finance ecosystem and delves into risk mitigation, supply chain finance, and introduces trade finance taxonomy as a framework for practitioners at all levels. Today, we're delighted to be joined by ITFA Chairman Sean Edwards and ITFA Chair of the Market Practice Committee, Paul Coles. Welcome.
Thank you, Dipesh.
Thank you, Dipesh.
Good to have you here. So let's start with the term trade. It's a word familiar with so many, even my parents understand it now. But trade finance is still often a term that's misunderstood. Now, people may understand trade in the context of the movement of global commerce, or now the challenges that trade faces, for example, the movement of goods around the Strait of Hormuz due to the Gulf conflict, the semiconductor supply chains, the importance of critical minerals in the supply chain. Where does trade financing fit in?
Yeah, it's an interesting one, and you're right. People are getting more familiar with the concept, but trade finance specifically, it still has two fundamental purposes. One is helping to mitigate risk for the importers and the exporters, and also providing that liquidity and working capital, and essentially bridging gaps in the supply chain. So when you think of ships and the time it takes to move from one port to another, and for these goods to move around, there's always that gap between when a supplier wants to be paid and when the buyer wants to actually pay for the goods that it's acquired. So that's where trade finance fits in, and it's that extra angle to the trade, the underlying trade that's happening and has happened globally for centuries now.
Thank you. And Sean, ITFA's been a central voice in trade finance, education, and market development for decades. So why is now the right time to update that guide?
A couple of reasons. I mean, firstly, it is part of our ongoing purpose to educate actually the newer generation. We have very active emerging leaders committee. But what we found is, especially post global financial crisis, is that you had a very aging population. I will sadly include myself, that were in trade and trade finance, and there weren't a lot of new people coming in. So there's a lot of knowledge on the one hand, sort of in these mental repositories in our heads very often, and there's new people who are actually increasingly keen, and this is what we've seen actually from the Emerging Leaders Program, increasingly keen on trade finance as a career. So when we introduce them to the of trade, they find it really interesting, but they need to pick up that technical knowledge. So that's one of the reasons we've done this. Also, of course, things have moved on. You mentioned AI at the beginning, but there's other technology, and I think fundamentally we might get onto it later. Trade in itself and the risks that Paul is talking about haven't really changed. There's still a buyer and a seller, and there's a period of time for the goods or services to reach the buyer, and there are risks there, and then there are questions of finance and trust and so on. So all of that really hasn't changed since the days of the Carthaginians or the Babylonians or whoever first traded. Um, but what has changed very much, I think, is the channels on which we deliver trade and trade mitigants. So technology has really become and is moving very fast into trade. There's a lot more data available. That data is being analyzed. Things are being done with documents that were not being done before. So we're moving from paper really to from paper to data sets.
Hmm.
So a paper document essentially is a bunch of data. Historically, it's had to be on paper, and there was a time actually when paper was very innovative, many centuries ago. Now we can take all that data and we can do all sorts of stuff with it, including substituting for trade documents. So, but we can do a lot more exciting things with it. There's a much bigger community involved in trade, and that's partly the complexity that we're trying to deal with. You mentioned that it covers the whole universe of trade. Increasingly, we're seeing a lot of insurers getting involved. There's a lot of solution providers. Inventory finance, for example, that needs collateral managers. There's a lot more people involved. It's the problems are the same. The solutions are more sophisticated, and that's really why we wanted to update the guide.
Thank you very much. And Paul, talking about this universe of trade, um, perhaps we like to make things complicated, but I think on the second page of the guide there's a very large hierarchical diagram of trade finance
Mm.
taxonomy, and that's really built on a collaboration between ITFA and Comgo. What problem does that taxonomy solve, and why does that matter today?
It's all part of that education process and trying to speak a single common language, because trade finance, the fundamentals are quite straightforward, but you can do it in many different ways. And over time, every every participant in the market has called it a slightly different thing or added a little twist. And there are components which can build on each other as well. So, for example, looking at the origination, the primary market, and moving on to the secondary market for trade finance. So, there are so many overlapping aspects to it, which were confusing over time. People didn't have that common language. And now that we want to make it more inclusive, educate people, including regulators, including, I guess, new finances in the market, so the non-banks, for example, who aren't familiar with trade finance but like the asset class, all these different angles. If we want to explain to them clearly and easily and point them towards something, you need that sort of lexicon of language, which is very clear and easy. And that's where the trade finance taxonomy came about and tries to lay everything out in one single document.
Hmm. And Sean, trade finance inherently is a risk mitigant. For example, and there are lots of types of risk: country risk, documentary risk, foreign exchange risk, fraud risk. Have those risks inherently changed in nature over the past few years? And how do people really minimize them in today's environment?
So as I said, I don't think all those risks have been around. I think often what happens, it's like the crime you didn't know about, but it's reported more, so it seems more prevalent. So if we think about things like fraud, for example, it is, or it should be, and it can be easier to detect fraud now with some of the new tools that we have,
Mm.
and AI may be a part of that. But we've had a lot of tech-enabled tools for a long time. So a lot of those things, like fraud, like the FX risk, which is something that we're trying to tackle through our TF COP initiative. All of these are things that were already there. I think as we become, and I think it is, people have spoken a lot about the death of globalization. That's very exaggerated. Yes, we've retreated in certain ways. There's been some nearshoring, but actually, what you've seen is a bit of a fragmentation of supply chains. That makes things a little bit more complicated because whether you were dealing with one big economy, you might have to deal with a smaller emerging market economy now. But essentially, the volume of trade has increased.
Mm.
So all of those things that were always important are still important. But the way we can identify them, the way we can mitigate them, has definitely changed. Technology is a big part, but education is part of it. If the new generation we're talking about don't understand what those risks are, and they are sometimes quite subtle, and they're not identified. But if they are identified, they will be that you can structure around them or mitigate them. It's not always insurance. Sometimes it's just a question of structuring your documentation the right way, or structuring the part, getting the right parties involved. If you've got inventory somewhere, get a collateral manager, that kind of thing. So this is why what we're trying to do in the guide, conjunction with you, is so important.
Thank you. And Paul, the guide covers everything from letter credit to Islamic finance to syndicated loans. We started talking about this earlier, but the question about who leads trade finance or who the core lenders are, is it still a bank-led industry, or is that model changing?
It's still bank-led, for sure. Banks still underpin most of the financial systems in the world today, and trade is, by definition, global. So those I say the bank-to-bank connections are still critical in all this. And pretty much every company has at least one bank that it relies upon. So the banks are still fundamental, but there are increasingly additional parties that are coming into this and providing complementary services. And I'd say, especially if you're looking at the financing of trade finance today, there's been a big shift towards trying to bring in non-bank financial institutions, and in particular, institutional investors and funds who are, again, interested in the asset class and don't necessarily fully understand how to tap into it unless they have access to the right tools and education and information or experts in the field. And the guide has, for example, inputs from Sachin Anandikar, who's in a non-bank financial institution, an institutional investor, basically, to give that extra perspective on what they're looking for, how they are part of this new ecosystem, which is also another ITFA initiative, the ITFI initiative, where we're looking at bringing in and educating those institutional investors, not to compete with the banks, but really to provide complementary funding where the banks don't necessarily play in the same space in the same way.
Thank you. Let's talk about digitization, Sean, and it's something we've been trying to do, digitize the documents that
Yeah.
really hold trade back. And ITFA has taken part in a number of initiatives, including the DNI, the Digital Negotiable Instruments Initiative.
Yeah.
What's the update?
Well, on DNI, it is, how would I say, it is going slowly but well. So the trajectory is definitely upwards. But I have to admit, we're starting from a small base. But it's funny, the number of people I see who have found religion, the religion of the digital bill of exchange. It's been around for a while, but actually more and more people are finding this religion, and they're starting to offer solutions. There's already, in fact, a lot of the blockchain technology that you have is fairly generic in its application. If you think of the basic Bitcoin type technology, of course, blockchain is not Bitcoin, but you see what I'm getting at. You can take the sort of technology that underpins a Bitcoin and you can use that for a bill of exchange, because essentially what a bill of exchange is it's a data set, which is validated by certain laws, and we've worked very hard, as you know, with people here in the UK, and elsewhere in the Middle East, especially, and in France, to get those laws in, which essentially give legal validity to what was a piece of paper. But as I said before, it's really a data set. But it's got those magic. Professor Sarah Green calls it the magic words. You put the magic words, and you can make those electronic or digital. You get all the benefits of that. And what's important to pick up on what Paul was saying with those is they are attractive to non-bank investors, because they have been used to an environment in which you've got an asset, of a relatively simple to understand asset, like a bond, and that's been put on a system, some clearing system, Euroclear, Sedel. And it has the terms, and it's the legal value is the document, if you like, that is on the system. And trade has had a few issues with that. But what I like to sometimes think of as a digital bill of exchange as being like a trade finance mini bond. It's got it's got the legal validity, and it's got all the terms that you need within it, and you can do all sorts of stuff with it. You can clear it, absolutely, put it on a settlement system, absolutely. You can attach all sorts of information to it: KYC, AML, sanctions, credit. So all of these things are possible, and they have been for a while. People are beginning to do them. I think the UK is a bit of a leader. We have some great people like Lloyds and Mercor. Actually, Mercor offering, in fact, a platform for other banks for these. And so I see a big interest in France now, interest in the Middle East. So it's going well. It is, the scale of it is small at the moment,
Mm.
but I think it is on a very assured upwards trajectory.
So slow but steady. So
Slow but very steady.
we've
Yeah.
talked about digitalization, we've talked about some of the tools, we've talked about some of the instruments. Let's talk about the rules. ITFA's published its own rule books. URTPO and URF 800 co-published with the International Chamber of Commerce. Paul, why does the industry need its own rules, and how widely are they actually being used?
Rules are just useful to remove the grey areas for people who are not familiar with dealing in this space. So it gives them a great starting point and a little bit of certainty and familiarity around what the roles and responsibilities are between the parties. And that's where, we find there's value in helping the industry by just pointing them in the right direction. That's also where the templates come into play, because similar thing, it gives you a great starting point. It's been validated by the industry. So both items are key to helping the trade finance world to grow and to build that confidence in how parties can interact with each other and hopefully do more business. And in turn, that helps grow the industry as a whole.
Thank you. Now, Sean, something that's really important to our readers and part of our mission at TTP is really helping real economy finance, particularly in emerging and developing and frontier markets. Could this guide help banks and practitioners in those markets access trade finance and do more overseas business?
So I think, yes, but is it the magic bullet that's gonna dislodge a whole sort of tsunami of finance for emerging markets? No, but I think one of the problems, and Paul sort of alluded to it, is people sometimes don't understand trade, and it becomes even more complicated both for the buyer and the seller, for exporters, say out of Africa or parts of Asia, to understand what's available. So this really is, it's a sort of guide to the perplexed, and if both people are using that guide, they understand each other. So Paul made a very good point earlier on about having a common language and a lexicon for all of this. Another initiative we did some years ago with a number of trade associations, including ICC and BAFT and the FCI, was a guide to supply chain finance. And that was a definitions booklet, because the problem there is that you had what was called the Tower of Babel problem, that people described the same thing in different ways. So no, it's not going to unlodge a whole raft of new finance, but it will make it more accessible. And I think Paul's also made a very good point. Talk about the ITFI group and what we're doing, what we're doing there. They are interested in emerging markets. It's a better yield. But it is complex to understand. People need to come to the table and speak the same language. That's part of the way in which the guide can help. There are other ways in which it helps as well, including documentation and generally, as a forum.
And TF COP is another initiative
Yeah.
that's probably addressed at the kind of more emerging markets, right?
That's definitely addressed at the emerging market. It's addressed at the SMEs, global SMEs. So it's a lot of those, not exclusive, but a lot of those will be in the emerging markets, and that's, there are all sorts of issues there, including local currency financing. One interesting thing is, what we're really trying to do there is trying to bring the multilaterals into it, and the solutions. So the solutions that for the SMEs in emerging markets need to make sense for them, i.e., they need to be accessible and comprehensible to them. On the other hand, they also need to be bankable, or I should say, not bankable these days. As Paul said, it's not just banks, financeable. So you've got first loss structures going on, sort of like securitizations. But what are the underlying assets? Is it a loan? Is it a bill of exchange? We think, going back to what I was saying about digital bills of exchange, that a bill of exchange is a really great product for trade. But you don't want to have all sort, to be trying to manage bits of paper coming out of Africa, and the funds don't have the infrastructure to do that. Increasingly, banks don't actually. But if it's digitized and it's on a ledger, on a platform, then that becomes much easier. You can start to put those into a sort of securitization or quasi securitization structure, tranche them, attach insurance to them. So all of this it's all part of a big vision.
Paul, a few years ago, I got told off for
Oh,
creating a map of the technology vendors.
oh,
So we've done it again, and with the kind help of Isabella Chisperska as well. Why did we do this vendor map, and what's that all about? And are
It's
we going to get in trouble again?
Well, no, we're not. Look, it's not designed to be a catch-all and uh, fully comprehensive, because there are so many new players out there that are constantly being added to the mix. But what we've tried to do is give an overview and a little bit of a breakdown per segment, because there
Mm,
are so many niches nowadays, and it's very much like the within ITFA, when we set up the fintech committee, it was designed to open up people's eyes to what's available, not necessarily say that this one's better than that one or anything like that, or try to capture every single permutation. But the idea is to allow people to navigate a little bit all these niches, because there are so many new service providers and long-standing ones as
mm.
well, who can help the industry and they provide very useful services. They fill the gaps that maybe the banks can't do themselves. They provide extra resources for corporates and so on. So it's really useful having a little bit of an idea as to who's out there and where they have their relative strengths, what their specialities are, what they can do to enable the business to happen, basically. So the idea was, yeah, let's put it in again. It's There's always the risk that people have been accidentally not included for one reason or another, but the reality is we weren't trying to capture everything and everyone.
Hmm.
We were just trying to give a little bit of a hint at what's available, where people can turn to, and of course, people can come to us or to you or do their own research to find out what other solutions are available.
Thank you very much. So the guide, it's going to be available throughout ITFA Americas in Miami. Also during ITFA week, be available to grab a physical copy. Also for everyone watching online for free, and at ITFA Split now. Sean, this isn't a plug for ITFA Split, but my
oh,
question.
go ahead. I don't mind.
I said no. But my question is, why is this guide so important given, the evolution of trade? I think if we were sat here 2 years ago, we probably would have had a very different conversation. So why is it important? Why is the guide important for those looking to navigate the increasingly complex world of trade? And what are some of the key themes that we'll be covering as we look ahead to ITFA's annual conference in Split?
Sure. So, one of the things, the first thing to say is it's in Split, right? It's in Eastern Europe. And hopefully we will be collaborating with EBRD to bring some of the smaller banks that's to the conference. That's something we did back in Budapest in 2019, and it's hard, but it's worth it. One of the things we always do, you mentioned it for week, core part of that is our educational, is our training session, which takes place over 2.5 days. We always run that before the conference as well, and the sort of stuff that's in the guide is the stuff that we are going to be as humans are going to be addressing there in Split. So, the themes for them are, this is the world for a lot of the people who will be in at our training course in Split, will be, this is the world of trade finance. There's a lot available here. You just talked about the tech guide and all the tech companies, because what I found, and I was at a conference in I think in Georgia some years ago, and what I found is that people sort of knew, the banks are surprisingly sophisticated, so they know what's going on. We are all connected. They know sort of roughly, but they don't know where to choose. They don't know where to go, and their juniors often don't know very much. So this is the big theme is you need to understand the basics before you can start doing the funkier stuff. The funkier stuff will be mixing actually with some of the very big banks that will be at our conference. But there's all sorts of new businesses in which this stuff is being applied. Defence being one example. We have a former chief of staff of the British Army who will be our keynote speaker, is opening the conference. And all this stuff, trade and supply chain finance applies there to what's a growing industry, for good or bad. So the themes are, there is a whole world of trade finance out there. There are all sorts of ways of doing it. It depends where you are in the cycle. Are you pre-export? Are you in production? Are you post-export? How can you mitigate the risks? How can you deliver this through technology? Where does digitization? It's moving so fast. I mean, you mentioned AI, and I think AI will have a big part in the physical trade. And one of the things that I've always tried to espouse is to marry the physical and the financial supply chains through technology. And that's one of the things we can't explain that fully in the guide, but that's just what we explain as a possibility. And so all of these things come together. I hope those people who are in Split will start from that and then move on to the great panels and presentations that we will have, and then we'll mix with the people there. Well, they'll actually flesh out what are the main components of what's in this guide.
Thank you very much. So, from London, in Miami, for everyone in the world, the ITFA Trade Treasury Payments Trade Finance Guide 2026 is officially out. That was Sean Edwards and Paul Coles at ITFA. Thank you very much.
Thank you.
Thank you.